my dear CA final students who just completed November 23 exams. I'm really very happy about the question paper and the feedback what you have given to me, and many students have messaged me that sir, majority of the questions are from the important concepts that you have given, and even from the Mighty 50, and the revision lectures was very much useful. Really, I am happier. And even the paper this time, it's not that difficult. It's like, I can say for those who are prepared, it is easy. So for others, it may be an average paper, but really for those who are prepared and those who really, believed in whatever I have said, so this paper will be really easy for you. And that was evident from many students who messaged me. And some students felt like the paper was lengthy and all. That's a common feedback for every attempt indirect tax paper. Okay, so let's see what are the questions that have come and what is the approach of these particular questions, etc. So question number 1, which is a 14 marks question. So Puva Impex Limited, a registered entity under GST in the state of Maharashtra, is engaged in various supplies. It provides the following information for the month of April 2023. Outward supply sold a future derivative contract at NSE, which was due in the month of April, and said contract has no delivery option. No delivery option means we are not going to deliver any goods against this particular contract. So this contract will be squared off. So when this contract is squared off, in that case, so we don't have any liability in this case. So because derivatives will come under transaction in securities. So transaction in securities, that too, this is sale of securities. So transaction in securities, neither goods nor services. So therefore it is neither goods nor services, and consequently there is no GST liability in this case. Okay, and that's what you need to write. Then second, supplied 50 LED TVs at Hyderabad to state government of Telangana, and 50 stands mandatorily required to mount the TV on wall were also supplied along with LED TV. So LED TV and wall mount, so this will be naturally bundled in the ordinary course of business, and they have given the rate of GST below. Rate of GST 9, 9 and 8 respectively for both inward and outward supply, except TV stand, for which the rate is 14, 14 and 28%. So in case of composite supply, so all are taxable. TV and TV wall mount, both are taxable, naturally bundled in the ordinary course of business. The principal supply is TV. So due to that reason, the rate applicable to TV only should be taken. So 28% will not be taken. So here the rate will be 18%. And where is the supplier located? Supplier is located in the state of Maharashtra, and TV means goods. So in case of goods, we need to take general provisions. Ending point of goods will be taken as the place of supply as per section 10(1)(b). So 10(1)(a). So in this case, the ending point is what? Telangana. So therefore, it will come under interstate supply. Interstate supply and chargeable to GST, and entire 8,72,000 will be taxable at the single rate of 18%, and it will come under IGST column, IGST liability. Number 3, provided intrastate service. Clearly it is given as intrastate service as a direct selling agent to Uday Small Finance Bank Limited for their retail loan products. So direct selling agent is covered under RCM if the direct selling agent is other than body corporate or firm. If the direct selling agent is body corporate or firm, it will not come under RCM. In this case, if you see Purva Impex Limited, so it's a registered entity, so therefore the supplier is a body corporate, so it will come under FCM only, it will not come under RCM. And GST is payable 18%, and it is given as intra, means CGST, SGST, and GST will be payable on that. It will come under FCM only, RCM not applicable. Then passenger transportation service provided to general public by a company owned ferries between two islands in the state of Maharashtra. Purpose was to facilitate daily commutation of local people. So this is in two islands. Two islands means coastal waters. coastal waters, transportation of passengers. So predominantly for tourism is only taxable, but this is what public transportation. Public transportation does not mean only operated by government. One circular is there. So public transportation can be operated by government or operated by any other person. So consequently, this will be coming under exemption. So there is no GST liability in this case. Then supplied goods to its agent in the state of Bihar. So whenever the sale is made to agent, so we need to determine the value in terms of rule 29. So open market value of the said goods were 3 lakhs and the said agent is supplying goods of like kind and quality to his unrelated customer at 3 lakh 20. So usually as per rule 29, we'll take open market value or 90% of the resale price to unrelated customer at the option of the supplier. In this case, a resale price is 3,20,000. 3,20,000 into 90% is 2,88,000. So at the option of the supplier with respect to each invoice, so 2,88,000 will be taken. So it's not 3 lakhs, 2,88,000 will be taken, and to a state agent in Bihar means it will be coming under interstate, chargeable to GST at 18%, but the value should be taken as 2,88,000. Remember, reason being, so 3,20,000 into 90%, 2,88,000 will be taken. And based on this, we will get CGST, SGST and IGST liabilities. Then inward supply. Availed HR training services for all its employees from B. Humble, a HR firm registered under GST in Maharashtra. Training was held at resort in the state of Himachal Pradesh. Now, in case of training and performance appraisal services, so what will be taken as the place of supply? If it is B2B, so as per section 12, B2B, location of recipient, B2C, location where service are actually performed. Here, so this is for training of employees. So HR firm registered in Maharashtra and the recipient is also a registered entity. So B2B means location of recipient will be taken. Supplier also Maharashtra, place of supply also Maharashtra, therefore it will come under intra-state inward supply. And can we take ITC with respect to this? Yes, GST will be payable and ITC is available with respect to this. And purchased processing machines from David and Company registered under GST in the state of Gujarat. Machines were brought in as is where is condition at Gujarat to produce taxable items. Now, as is where is condition means like wherever it is, there only it will be procured, which means so supply does not involve movement of goods. When supply does not involve movement of goods, location of goods at the time of supply will be taken. Where is the supplier located? Gujarat. And what is the place of supply? Place of supply will also be taken as Gujarat, because as is where is condition means wherever the goods are located, so that particular place only the sale is happening. So then supply does not involve movement of goods, 10(1)(c) will be taken. When supply does not involve movement of goods, place of supply will be location of the goods. So where is the location of goods? Location of goods is in Gujarat. So therefore it is intra in Gujarat. Intra-state in Gujarat means CGST, SGST paid in Gujarat. But where is this person located? Maharashtra. Whether ITC available or not available? No ITC. Why not no ITC? Because GST paid in the other state. CGST, SGST paid in other state cannot be taken as credit. So due to that reason, ITC is not available in this case. Then purchased 5 two-wheelers with engine capacity of 25 cc. So 25 cc, not exceeding 25 cc, is not a motor vehicle for blocked credit. So blocked credit motor vehicle, the engine capacity should be greater than 25 cc. Exactly 25 cc means not a motor vehicle, so we don't have any blocked credit in this case. And ITC will be definitely be available. So for use of its employees both within and outside the factory producing taxable products. Supply was made at Mumbai by a GST registered dealer at Tamil Nadu. So supplier is located in Tamil Nadu and place of supply will be, so ending point of the goods, that is Mumbai, therefore it will be coming under interstate and ITC is available in this case. Then the company provided the following additional information. Company wishes to choose the most beneficial option in respect of supply to agent. So that's why we will take 2,88,000. This is the most beneficial option. Company transferred certain taxable items to its Kerala branch for distributing as free samples on the occasion of inauguration of the said branch, which yet to be registered. So they transferred certain taxable items to the branch. Branch is yet to be registered. So even then it will be treated as a distinct person. So why? Because when we have a branch in another state, establishment in another state, even though not registered, that establishment in another state will be treated as distinct person. So the meaning of distinct person, 2 points are there. That is, registered establishment of a person, so in another state or in the same state, is not a distinct person. One registration of a person to their another registration is distinct person. But even if you have an unregistered establishment in the another state, so even that unregistered establishment in the another state will be treated as a distinct person. So this is a transaction between a distinct person. So rule 28 will be applicable in this case. In case of rule 28, we need to take open market value. So value declared in the invoice for transfer was 2.5 lakhs. We will not take transaction value. Why? There is one proviso which says that if recipient is eligible for full ITC, value declared itself will be taken as open market value, but recipient is not eligible for full ITC, because what recipient is going to do is that they are going to distribute it as free samples. When they are distributing it as free samples, how they will be able to take ITC? So therefore, this 2.5 lakhs will not be taken. Open market value, yes. Open market value 3 lakhs will be taken, so we need to take 3 lakhs, and this will be coming under interstate supplies and chargeable to 18%. Okay, this is outward supply. This is outward. This is not inward. This is outward. So we need to add it to the outward liability. Rate of GST. Okay, already we have seen all the given amounts are exclusive of taxes. Except specially written, all inward supplies were used for taxable as well as exempted outward supplies. See, they have only 3 inward supplies. Inward supply number 3 used fully for taxable, means don't reverse any ITC, take full ITC. And inward supply number 2, first of all, they cannot take ITC because it is CGST, SGST paid in the other state. And first case, they can take ITC, but that is partly used for taxable, partly used for exempted. So you need to take proportionate ITC with respect to taxable. So exempted, you need to reverse. So therefore, this 4 lakhs, whatever ITC is there, 4 lakhs into 9%, 9% CGST, SGST, we need to reverse proportionate to exempted. So what is the exempted turnover here? Exempted turnover here, not a supply will not be like transaction in securities. Transaction in securities also will be treated as exempted supply. But how much will be treated as exempted supply? 20 lakhs into 1% will be treated as exempted supply. So 20 lakhs into 1%, so that is 20,000, and this passenger transportation 1,20,000. So 20 plus 1,20,000, 1,40,000 will be treated as exempted, divided by total. So total turnover will take, but while taking total turnover, this 20,000 also should be taken into the turnover. Okay. So here we have one point related to reversal of ITC with respect to this first inward supply, because except specially written, all the inward supply were used for taxable as well as exempted outward supply due to that reason. No inward supply used for non-business purpose. Okay. There was no opening balance of ITC. So very, very less. And from the information given above, you are required to compute the eligible ITC and net minimum GST payable. So from this outward supply data, we got CGST, SGST, IGST, and thereafter ITC you will avail. So once you avail the ITC, then we need to reverse the ITC proportionate to 4 lakhs related value. So once we reverse the ITC, remaining ITC available for utilization against the liability. So net GST payable will be taken. And here turnover, if you see, turnover, like while taking taxable turnover, so 8,72,000 plus 5 lakhs plus 2,88,000, and as the outward supply turnover, taxable turnover does not exceed 50 lakhs in this month, so 86B is not required to be applied in this case. So that rule 86B is not applicable in this case. Okay. Now, so reason for treatment in each item to be given. Actually, no, for the first time I am seeing a 14 marks question. That's simple. It is really simple. It's not difficult and all. So like if you are strong enough on the exemptions and RCM and place of supply, so it's enough. You will be able to arrive at the answer. Little tricky points are there. So that is basic. It will be there in 14 marks question. And then question number 2A. Okay, let's see this question number 2A. Mr. Dev is registered as a regular taxpayer under GST in Mumbai, Maharashtra since July 2017. His turnover for the previous year 2022-23 was 2 crores. He provides the following information pertaining to various outward supplies made by him during the month of April 2023. Number 1, service by way of storage or warehousing of raw vegetable fibers such as cotton, flax, jute, etc. Previously, we had some list of goods which were exempted if it is storage or warehousing of those goods, but now that is omitted and they have retained it for cereals and pulses. So, these raw vegetable fibers are not per se the agricultural produce, because these are extracted from the agricultural produce. So, therefore, it will not come under service in relation to agriculture or agricultural produce. So, consequently, now it will be taxable, and we don't have anything related to RCM. So, therefore, it will be FCM. Liability to pay GST is on Mr. Dev. Then supply of online mathematics journal to model CBSE school for its secondary and higher secondary students. So, that is supply of online educational journals and periodicals to category 2 educational institution is only exempted. Here school will come under category 1 educational institution. So, therefore, this online periodicals and journals is not exempted. It will be taxable. Again, it will be coming under forward charge mechanism, where liability to pay GST is on Mr. Dev. Suppose if it is for category 2 like a college, university, etc., then it would have been exempted. Then third, made a composite supply of goods and services to Messrs. Maharashtra State Development Corporation, a government entity, by way of any activity in relation to function entrusted to a panchayat under Article 243G of the Constitution. Value of supply of the goods constituted 23% of the value of said composite supply. So, there is one exemption. So, that is pure services provided to government or composite supply of goods and services provided to government in relation to the function entrusted to government under Article 243G or 243W of the Constitution, then that pure service or composite supply is exempted. But that exemption is available only to government, and that too in the composite supply value of goods should not exceed 25% of the total. If you see here, yes, the value of goods does not exceed 25% of the total value, but this service is provided to a government entity, not government. So, therefore, the exemption is not available in this case. So, consequently, it will also be taxable and it will be coming under FCM. So, liability to pay GST is on the supplier. Then, sitting fees received for attending a committee meeting as an independent director from Messrs. ABC Limited. So, sitting fees, definitely this will not be coming under salary. So, services provided by director to company, so it is covered under supply because it is not salary, and consequently TDS is deducted under 194J and it will come under RCM. So, it will be taxable under RCM. So, it will not be taxable in the hands of Mr. Dev, but it will be taxable in the hands of ABC. So, don't add it into the taxable value of Mr. Dev. Then insurance commission received as an insurance agent. So, this is an inward supply. Insurance commission received as an insurance agent. So, no, he is providing the services from XYZ insurance company, which means he is providing service to the insurance company. So, insurance agent services to insurance company is taxable under RCM. So, therefore, it will be covered under RCM in the hands of the insurance company, not in the hands of the supplier Mr. Dev. Then services provided to state government of Maharashtra for conducting a fitness training program for its employees. 71% of the total expenditure, any training program for which at least 75% of the expenditure is borne by the government. So, here only 71% of the expenditure is borne. So, we will not get the exemption. So, it will be taxable under FCM in the hands of Mr. Dev. Then honorarium received by Dev to appear as a guest anchor on a TV channel. So, this guest anchor in a TV channel, we have one CBSE circular which says that. So, guest anchor, if they are registered, definitely it will be taxable. We don't have any exemption with respect to that. So, it will be taxable under FCM and they are registered, regular taxpayer in GST Maharashtra. Then, amount received for services provided to recognized sports body as a commentator. Only individual as a player, referee, umpire, coach, team manager to recognized sports body is exempted. Here it is commentator. So, therefore, it will be taxable under FCM. So, here 4 lakhs plus 2 lakhs, 6 lakhs plus 1 lakh 40,000 plus 1 lakh 50,000 plus 25,000 plus 6 lakhs. So, that will come to 15 lakh 15,000 will be taken as the value of taxable supply, and on that accordingly GST will be payable. So we have all these are intra-state supply and the rate of GST is 9% each. So accordingly on this CGST and SGST will be payable, and we need to give the proper explanation to each and every point. So then only we can expect full 9 marks. So this entire question is only on the exemptions, and again taxable, FCM, RCM. So if you know that, you will be able to get the answer for this. 2B is related to customs valuation. Milli Limited imported a machinery from USA. The machine reaches Delhi airport first, and then from there it is transshipped to Dehradun airport. Transshipped, not transited. Transshipped means what? From one ship to another ship it will be taken. From the following details furnished, compute the assessable value up to the nearest 1 rupee for the purpose of customs duty payment. Price of the machinery is $15,000. Air freight is $4,000. And license fee related to imported goods payable by buyer as a condition of sale. So that should be included in the FOB. Any license fee related to the imported goods payable as a condition of sale of goods to India will be part of FOB. So price of the machine will be taken as FOB. So $15,000 will take as FOB, and this 15% we need to add to that. Okay, so FOB will be taken as $15,000, and this license fee so will be added. So 15%, so 15,000 into 15%, that will be $2,250 will be added. Then drawing charges paid to architect in India will not come. This will not be taken. So reason being, drawing charges or design charges paid outside India will only be included in the value, but paid in India will not be taken in the value. Commission, not buying commission, means selling commission paid by the buyer to agent of exporter in USA, means selling commission. Selling commission will be included as a part of FOB. So therefore $15,000 plus 2,250 plus 250. Then other details also we will see. Insurance charges paid in India not ascertainable. Okay. Material supplied in USA by the buyer free of cost, valued at 75,000 rupees. So any material supplied by the importer to the exporter to be used in the imported goods should be included in the value. So therefore that should be taken, but these numbers we will convert into Indian rupees, and then we will add. For that we need to take the exchange rate. What is the exchange rate given? So exchange rate to be considered is 70 rupees per dollar. So therefore we will take 70 rupees, and that will come to, so $15,000 into 70, so 10,50,000, and 2,250 into 70, that is 1,57,500. Then 250 into 70, 17,500, and this material, that material we need to add 75,000. Then importer paid transshipment charges, this is post importation. So importer paid 20,000 towards demurrage charges for delay in transport of the machine from Delhi airport. Okay, so this will be taken as the revised FOB. So what is the revised FOB? Revised FOB is 10,50,000 plus 1,57,500 plus 17,500 plus 75,000. So that will come to 13 lakhs is the revised FOB. Now we need to take freight. How much should be taken as freight? Actual or 20% of FOB, whichever is lower, because it's air freight. What is the actual? 4,000. So 4,000 into 70, that is 2,80,000, or 20% of FOB, 13 lakhs into 20%, 2,60,000, whichever is lower. So we need to take 2,60,000. Then remember, demurrage charges will not be coming. So only ship demurrage charges will come. So this demurrage charges will not come. Even transshipment cost will not come. Only transit freight will be included, but transshipment freight will not be included. So we have seen multiple questions in that it is there. And then insurance, how much will be taken as insurance? 13 lakhs into 1.125%, that is 14,625 will be taken. So this will be taken as the assessable value, 13 lakhs plus 2,60,000 plus 14,625. So 15,74,625 will be taken. So they're asking us to compute the assessable value. So therefore 15,74,625 is the answer for this. So again, it's a simple question except for the transshipment charges and demurrage charges. And even drawing charges paid to an architect in India should not be coming into the value. Then next, 3A. So question number 2 is actually, say I don't know about other papers. But when it comes to indirect tax, I feel like they want to do stock clearance. For November 23 attempt, they want to do stock clearance, so that's why. This question and all is for 9 marks is too much here. So if you know exemptions and RCM, you can complete this 9 marks question. So that Sir CG got salads, okay, and even some exemptions, little bit of exemptions done. 9 marks. And this question also not many adjustments. Assessable value, direct computation, so for which 5 marks. And it is not ex-factory price also, price of the mission. So FOB we will take that. Then question number 3A, Anuja checked in at the Welcome Tourist Lodge in Madurai on 15 July 2022. The room rent for the same was 900 rupees per day for a single room. She checked out on 17th of July 2022 and payment in respect to the same was received by the lodge via check at the time of checking out and entered in the books of accounts on the same day. The lodge decided to issue her the invoice on the same date when the amount gets credited in its bank account. The rate of tax on hotel rooms, which was exempt up to 1,000 rupees earlier, became chargeable from 18 July. Yes, from 18 July, this exemption was withdrawn. Under the GST law, determine the time of supply and taxability of the service of lodging in the hands of Welcome Tourists if the check gets credited into the bank account of Welcome Tourists on 20th July 2022. So this is a question related to, so time of supply in case of change in rate of GST. And here we need to first take what is the date of change in rate. Change in rate 18 July. And when the payment got credited 20th July. If the payment gets credited within 4 working days, here assume all days are working days. So if the payment gets credited within 4 working days from the change in rate, so date of payment will be taken as the date of entry in the books or date of credit in the bank account, whichever is earlier. So what is the date of entry in the books? So she checked out on 17 July and payment, so via check at the time of checking out and entered in the books on the same date. So date of payment will be 17th July only will be taken, not 20th July. Wait, because account entry date or payment credit date, whichever is earlier. Then next, date of invoice. What is the date of invoice? So invoice, lodge decided to issue her the invoice on the same date when the amount gets credited in its bank account. When the amount gets credited in the bank account, 20th July. So date of invoice is 20th July. And date of completion, when the completion, when she checked out, 17th July, she checked out. Okay. Now, so if the supply is before change in rate, actually supply is before change in rate. 18 July there is a change in rate, supply is before change in rate. If the supply is before change in rate, we need to take invoice date or payment date, whichever is earlier. So what is invoice date, payment date, whichever is earlier? So 17/7 only is the earlier date. So 17/7 there is no GST. So therefore GST not payable in this case. So the time of supply is 17/7 and they're asking determine the time of supply. Time of supply 17/7 and taxability of the service GST not payable. Why? Because as on 17/7 the rate of GST for this is exempted. The service is exempted. So due to that reason GST not payable. Then 3B, Ria is a person registered under GST in Mysore, Karnataka. She transports certain goods by air to Mrs. Iyer, who resides in Florida, USA. The air cargo operator by which the goods are transported is registered in Bengaluru, Karnataka. Determine the place of supply of such transport or courier service under GST law with supporting notes. So who is the supplier of service in this case? We need to know. Supplier of service, here, Ria is a person registered in GST. She transports certain goods by air to Mrs. Iyer, who resides in Florida. The air cargo operator is registered in Bengaluru. So supplier is located in Karnataka. And where is the recipient located? So recipient is located in Karnataka. Recipient also located in Karnataka. So section 12. But the goods are taken from India to outside India. Irrelevant. So goods are taken from India to outside India. Irrelevant whether it is B2B or B2C. So whether it is B2B or B2C. If the goods are taken from India to outside India, place of supply will be taken as ending point. Okay, so what is the ending point of goods? Ending point of goods, that is Florida, USA will be taken. Reason being, in case of transportation of goods, okay, service, so B2B or B2C, if the goods are taken from India to outside India, ending point will be taken. So due to that reason, ending point is Florida, USA will be taken as the place of supply. 2 marks. Okay, simple point. But B2B or B2C, that is irrelevant here. Then number 2, Mischievous Muppets, a kindergarten school in Pune, Maharashtra, has given the contract of catering service to a Pune-based agency, Toddlers Catering Agency, registered under GST. Whether the said catering service provided by Toddler Catering Agency in the school is taxable under GST? No, it is exempted. Why it is exempted? Catering service provided to Category 1 education institution. So this kindergarten school is a Category 1 education institution. So catering service provided to Category 1 education institution, that is education up to 12th standard. So to them, preschool including education up to 12th standard is exempted here. Easy, 4 marks. Then 3C, Mezzo Blanco, a firm registered in India, imported certain items of machine equipment from China. These items were bestowed with subsidy by the Chinese government for production as well as export to other countries. Considering the impact of subsidized articles being imported into India, Indian government imposed countervailing duty under Section 9 of Customs Tariff Act on the import of said items. So Mezzo Blanca managed to import the same product with altering the name of the product, but proper officer imposed the countervailing duty on the said import. Mezzo Blanca seeks your advice on the correctness of the action of proper officer and also want to know the different ways of circumventions which are prohibited. This is the concept of circumvention of anti-dumping duty and anti-subsidy duty. So whenever we alter the name and description and import the goods, or whenever we import it from a different port of origin, or whenever we change the country of origin, so in the documents, so in all these cases or any other means by which we try to circumvent the anti-subsidy duty, so whatever is the notification that is available for anti-subsidy duty for that article can be extended to even this article for which the description or name has been altered. Okay, so this is a concept of circumvention of anti-dumping duty and anti-subsidy duty. So while discussing the revision lecture, I told you this is a very important theory question that can be asked. So it has been asked. Actually, it was due 2 attempts before itself. They should have asked. So and like they asked now only. So it's a 5 marks question, very easy. Then 4A, Mr. Broker wrongly availed 1,25,000 input tax credit at the time of furnishing return under Section 39 of CGST Act for the month of October 2022. Wrongly availed ITC. This ITC was not utilized against a liability for the month of October. Not utilized. When availed? October, not utilized. Mr. Broker utilized ITC of 75,000 for the above wrongly availed ITC of 1,25,000 against output liability for the month of November. So when it is utilized? November. That too, how much is utilized out of 1,25,000? 75,000 only. Now Mr. Broker paid the amount of ITC, wrongly utilized 75,000 on 10th March and reversed the unutilized amount of 50,000 on 20th March. Calculate the total interest payable. Rounded off to nearest rupee under GST law, if Mr. Broker files 3B for the month of October on 18 November and 3B for the month of November on 25th December, assume there is no extension of due date of filing 3B and no other transactions. So superb. This is what? Interest computation related to availment and utilization of ITC. I gave many important concepts that must be covered for CA final November 23 exam. In that clearly I mentioned interest computation. So interest computation on account of wrong availment and utilization of ITC will come for November 23 exam. So it came. And exemptions, I said, renting GTA. So exemptions I asked you to discuss, like learn. And even reversal of ITC, first question, it got tested. Okay. And therefore, that's what, like this Interest, many times I said, please here you read, refer this. So simple, from the date of utilization till the date of reversal. What is taken as the date of utilization? Date of utilization is due date of 3B or actual date of 3B, whichever is earlier. So for October, what is the due date of 3B? 20th November. Actual date of 3B, 18 November. Whichever is earlier, 18 November. So interest computed from 18 November 22 to. So till the date of reversal, what will be taken as a reversal or payment whenever they are filing the 3B for the month of December, like Mr. Broker paid the amount of ITC, wrongly utilized. So in which month it is utilized? So utilized is in the month of November, na? Utilized in the month of November. Mr. Broker utilized ITC November. So we have to take for November. For November, what is the actual date of 3B? So 25th December, or due date of 3B, that is 20th December, whichever is earlier. So we need to count from 20th December. Reason being, so from the month of utilization, what is taken as the month of utilization here? November. For November, we need to take the date of utilization as due date of filing 3B or actual date of filing 3B, whichever is earlier. What is the due date of filing 3B? Usually due date will be 20th of next month and actual date of 3B will be 25th December. So therefore 20th December to the date of reversal. What is considered as the date of reversal? Mr. Broker paid the amount of ITC wrongly utilized on 10th March. 10th March they have paid. So therefore we need to take till 10th March and reverse the 50,000. Because 75,000 what they availed, they have paid. So due to that reason, on that only. So 10th March, how many number of days? So December 31, 31 minus 20, you take 11 days in December. January 31 days, February 28 days, March 10 days. So for 80 days, we need to compute interest. On what? On only 75,000. So 75,000 into 18% is the rate of interest into 80 divided by 365. So 75,000 into 18% into 80 divided by 365, that will be 2,958. So 959. So this will be taken as the answer, and here on 50,000 we don't have to compute the interest. Why? Because 50,000 of wrongly availed ATC, it has been reversed without utilization. So due to that reason, we don't have to compute the interest on that. That's 4A. Then 4B, Messrs. Cute and Company, a registered person under GST, filed an appeal with respect to denial of input tax credit related to the financial year 17-18. This appeal was disposed of in favor of Cute and Company on 39/2022. Annual return for the financial year 17-18 was filed by it on 31/3/2020. Due date for the said return was 7/2/2020. Cute and Company seeks your advice with reason regarding the timeline which they are supposed to retain the books of accounts and other records as per the provisions of CGST Act. Okay, so time limit is given in section 36. What is the time limit in this case? First, A we need to take, that is 72 months from the due date of furnishing annual return for the financial year. What is the financial year? 17-18. For 17-18, what is the due date of furnishing annual return? 7/2/2020. So you take 7/2/2020 plus 72 months. Plus 72 months, which means like 6 years. So 7/2/2026. Or B, 1 year from the date of disposal of appeal. So when the appeal got disposed of 39/2023, so 2022 plus 1 year, that will be 39/2023. So whichever is later should be taken, because so we need to take 1 year from the date of disposal of appeal, or 6 years, 72 months from the due date of furnishing of annual return. So annual return was filed by it on 31/3, but the due date is 7/2. So 7/2 should be taken. Whichever is later will be the answer. Then question number 4C. Messrs. Lotus Auto Weaves imported 10 automated looms from Germany for a price of $70,000. The price was settled and the machines were shipped on 20th March. Meanwhile, the importer made further negotiations with the exporter for reduction of price of looms based on the leads given by them so far. and also in future. Due to this negotiation, exporter further reduced the price of 10 automated looms to $60,000 and confirmed the same by email dated 30th March. However, the consignment arrived in India on 29th March. Proper officer of customs ignored the revised price, confirmed by email, and assessed the value on the basis of original price of 70,000. This was contested by the importer as unfair action by the department. Importer seek your advice on the correctness of the action of proper officer. Give reason in support of your answer. Determination cannot be made by the officer. If yes, whether the fresh demand is valid. Fresh demand also cannot be made. Reason being, the time limit to issuance of notice is over. So due to that reason, fresh demand also cannot be made. Suppose, if the above notice is issued under section 74, is assumed to have been issued on 24/9. What would be the answer? If the notice under 74 is issued on 24/9, it is within the time limit under section 73. So therefore, redetermination can be made, and whatever is the amount of demand under 74, that can be redetermined and can be collected. And they have not given one more question. One more question is also should be given there, or else we need to write, that is the time limit. The time limit for the redetermination is 2 years from the date on which they got the direction from the court for redetermination. So that should be taken. Then, so this literally, even regular batch, fast track batch, everywhere I said, even while discussing important concepts also I have given this. Then 5C, you are required to calculate the amount of interest receivable or payable rounded off to nearest one in the following independent cases, along with brief explanation for the same with reference to the provisions of Customs Act and rules made thereunder. Duty drawback, interest computation. This 5 marks question is there na? In my solved workbook, like now I have given mighty 50 questions. Say this. So in my website, in mighty 50 questions it was given. Same question, ditto. Okay. So I asked the students, at least you read this mighty 50 questions. In that mighty 50 questions, a question on duty drawback is there. So say this. In mighty 50, I gave this question. So for 5 marks, it was asked in ICI June 21. And this question again, so they have given for 5 marks here. So 2 interest computations. Mr. Lolo filed a refund claim, the claim for duty drawback amounting to 1,80,000 on 25th September. However, the amount was received on 30th December 2022. So within 1 month from the date of duty drawback claim, they need to give refund. What is 1 month from 25th September, 25th October? But they gave on 30th December. So what is the delay? So October you take 6 days, and November you take 30 days, and December you take 30 days. So 66 days. For 66 days, they need to compute interest at 6%. So what is the amount here? 1,80,000 into 6% into 66 divided by 365. So 1,80,000 into 6% into 66 divided by 365, that is 1,953. Then Mr. Golo was erroneously refunded a sum of 45,000 in excess of actual duty drawback. On 15th April, department issued a demand notice for recovery of excess amount on 25th July. He returned the excess amount on 25th August. So we need to compute from the date of duty drawback till the date of returning of the duty drawback. So 15th April, don't count that. So 30 minus 15, so 15 days in April, and May 31 days, June 30 days, July 31 days, August 27 days. So for 134 days, we need to compute interest on 45,000. And what is the rate of interest? 15%. In customs, 15% is the interest into 134 divided by 365. So 45,000 into 15% into 134 divided by 365. So 2,478 will be taken. Then next. So this question number 6 also this time was easy question. List the instances where TDS is not liable to be deducted under GST law. So like few cases when the supplier is unregistered, if the contract value of supply does not exceed 2,50,000, and then if the supply is exempted or non-taxable. Then number 4, if the transaction is intra-state supply but the recipient is in a different state, and then if the transaction is covered under RCM. So these are the cases where TDS is not applicable under section 51 or supply to other than notified recipient. Then R, with reference to provision of section 93, discuss the liability to pay tax, interest, penalty on death of a person. So in case of a death of a person, if the business is continued, the legal representative is liable to pay the dues of the deceased person. If the business is continued, whatever may be the amount. If the business is not continued, the legal representative is liable to pay dues only to the extent of estate inherited by them. So that point, either this or that. Then write a short note on summary assessment under section 64. What is summary assessment? Also known as income escaping assessment. So whenever proper officer is of the opinion that a taxable person has evaded the tax and the proper officer has reasons to believe that delay in passing assessment order, he may escape from payment of tax, then the proper officer, without giving any opportunity of being heard on that person, serve an order known as summary assessment order. And thereafter, within 30 days, based on the request by the taxable person or suo motu, so by the officer may withdraw that summary assessment order and may proceed to assessment as per other provisions. That is this. Then list the rights of the owner of warehouse goods with reference to section 64 of the Customs Act. So what are the rights? The owner can show the goods for sale and he can sort the goods, but he need to take necessary precautions to ensure that the goods are not damaged in the warehouse. So, and he can move it from one warehouse to another warehouse. So these are the rights of the owner of warehouse goods as per 64. So that's it. This is your paper. But to be frank with you, actually every faculty will tell no, paper is difficult, so because of me only paper became easy like that. I don't want to tell that lie. So actually this attempt, the paper is easy, and any student who has attended any classes without even preparation, they will be able to write. So it's not just my class, any class if they attend, they will be able to. But what is that I did is that I gave some selected 50 questions and revision I did, and even important concepts I said majorly, at least. Even you have attended batch long back, etc. and all, at least with that also the student will be able to cope up. So that is the thing which I have done. And indirect tax paper this time compared to other attempts like May 23, November 22 or May 22, November 23 attempt paper is easy. But I don't know whether the same will be there in May 24. Reason being, new syllabus, so definitely they may not retain the same standard. New syllabus, they have already removed one paper also. So 3 papers are only there. So that's the reason why we cannot expect the same kind. So maybe it is like a farewell. So it is like a farewell or set off to the students. So for that they would have given it easily, and this attempt I definitely hope that students will be touching 80s and all, so all of my students, and because of which aggregate will be taken care. Fine. So now I just wanted to give you some concluding remarks here. That is, even MCQ paper, like MCQ part was little tricky is what many students said. I could not get the MCQ paper. If I get it, so as soon as I get it, immediately I will record it and I will upload. And so what is that you need to do? Right now, you have completed your CA final exams, and till the time results come, so it will be somewhere like Jan mid. So you can make use of this time effectively. You need to learn certain skills. So that is very much required. So because this time you will definitely not be touching book, and already you have been into the preparation, and with that vigor itself, what you should do is that you should try to attain certain skills which will definitely help you. Say like result day, you are successful, you got the result and you became a chartered accountant. So definitely these skills should give you push to become a successful employee of an organization. So your employment career should be accelerated. So for that reason, so I have personally started one venture, the Learn Bridge. So in this Learn Bridge, we are offering right now 2 courses, SAP, FICO and Excel Pro. So this SAP FICO, I will recommend you to please go through this SAP FICO. Reason being, today you see many organizations, so they are implementing the ERPs, and as you know, so the top 3 ERPs is SAP, Oracle Finance and Microsoft. So but in India, SAP and Oracle Finance only. In that also majorly it is SAP FICO. So SAP has multiple modules, but the relevant module for you is FICO, Finance and Control. And in this module, you need to understand how that platform works and how to work on that platform, etc. So like we have launched one course. I'm not taking because I'm an indirect tax faculty. I identified one certified SAP trainer, and that faculty has 15 years of rich experience and worked on multiple projects, and that faculty will be taking the training program for around some 60 hours, 2 months, and wherein after completion of the course, you will be conducted with one exam, MCQ test only, and a course completion certificate will also be provided. Based on that, you can add it in your resume and you can apply in the job. So that, already you are a CA with this SAP knowledge. So furthermore, the resume gets shortlisted and there is a chance of asking higher package also. You can demand the higher package also, and even for them it will be convenient because they don't have to incur the money on training you. So already you have the experience related to this. And 60 hours is only classes, but rest of the time you can sit and practice on the software. For that, we are providing the access for 3 months. So 3 months software access will be given. So there are two softwares. ECC was the previous version. ECC was the previous version, and HANA, HANA is a cloud-based SAP software, S4 HANA. So that access, both the software's access we will be giving to you so that you can start practicing on the software. And so the moment you go for the job also, if they ask any question, immediately you will be able to reply to that. Okay. So the more details about this particular course and timings, fee details, etc. is there in the description. So you just register for the free demo and you attend the free demo. Once you are confident, once you feel like, yes, I can do that, then please go for it. Okay. Then one more course also which we have launched is Excel Pro. So this Excel Pro is for the students, like already you might have learnt it in articleship, then not required. If in articleship you have learnt Excel properly, then not required. Otherwise, maybe some students would not have done articleship that great or would not have learnt Excel that great in articleship, then you should attend this particular Excel Pro course. So all the major functions of Excel, again, that is also not taken by me. As Microsoft certified Excel expert will be taking that particular classes. So if you are interested, you can check the details and you can subscribe for it. Okay. And thank you all. Thanks for your support, and definitely please update me once you get the result. So I will be really excited to hear results from you. Thank you. Signing off. Take care, and always I will be so willing to serve you all in every endeavor in your life. Thank you all. Take care.